both long and short trades. So before we talk about the content, a quick disclaimer that the information that we share during the presentation is for the educational purpose. It's not a trading or investment recommendation. So before making any decision based on the information shared, please check with your financial advisor. All right. So after 3 weeks of advance, finally a week of a breather, means both Nifty and Sensex ended almost on the flat note. For most part of the week, the bias was on the positive side. Friday, that is today, we saw that index slipped around 1% and erased all the gains that we had and ended almost on the flat note. Coming to the sectoral performance, mixed move, as you can see on the left hand side and right hand side. Metal, realty, auto, energy, and banking. They were the top performers, especially the metal counters, which gained nearly 3%. The index. At the same time, pharma, media, IT, financial services, and FMCG, they all traded lackluster and ended with losses. Topping of the top 5 gainers from the Nifty 50 basket, first that we have on the list is iShares, nearly 7% kind of a gains, followed by M&M, Hindalco, M&M, Bharti Airtel, and Tata Consumers. At the same time, Sun Pharma, Titan, Cipla, Wipro, and Adani Ports. The 2 names from the pharma space and rest from the other sectors is something that ended on a weak note, were among the top losers. So as you can see, it's a mixed week for the markets after 3 weeks of rise. Now, what is charts indicating for Nifty? So this is the daily graph. The last time we were discussing about index testing this upper band or maybe, surpassing that area. So yes, we did test, but we couldn't surpass. So last week also, we maintained the same level of resistance, 22,700 to 22,850. So we penetrated that zone for brief, but we couldn't sustain. And this is the Friday's candle, the red candle today. So this indicates that this trend line, as you can see, this red line is acting strong hurdle as of now. And the global clues, which we were referring to, especially last week about the US markets, that we are seeing pressure, intermediate pressure. So that is also weighing on the sentiments. So going ahead also, we feel that this week also, the coming week also, this level is likely to keep the upside capped, 22,700 to 850. And downside, this faded yellow line, as you can see on your screen, around 22,350. That will be the strong support zone, followed by this low of this green candle, which also coincides with the previous support area around 22,150. So this broadly 22,150 to 350 is going to be the major base for the index in the coming week. So upside seems limited, downside, yes, we have room. Plus the earnings season has started. We will see the reaction of the IT majors on Monday, post the TCS numbers. So that will be the next important thing that market are going to keep a close eye on. So apart from global clues, how the global markets progress over the weekend, plus the reaction of the IT majors. But broadly, this range, 22,350 to 750, 800 is what the charts are indicating. Now, let's talk about banking. Banking still was comparatively okay. If you exclude today's session also, it was down by nearly 1%. A steady move, a new record high, 49,000 mark, we were eyeing as a resistance. We just, tested the same. Just like Nifty, banking levels are also intact. We have not made any changes to the resistance zone, which maintained for the last week, 49,000, 49,800. So we've tested 49, but we couldn't sustain, and then we are seeing profit taking. Mixed trend across the private banking majors. PSU basket is still continuing. Now the earning season has started, obviously, so this thing is going to uh, reflect more. Means if the ICICI uh, outshine others, because that is what charts are indicating. Because steady move in ICICI, if we exclude a couple of days of negative performance, ICICI is sustaining this move, so it might reflect in the results also. So one needs to be selective in this space when the index is at the record highs, but we are seeing a bit of a profit taking plus the volatility on the global front. So for when it comes to banking, this zone, the previous resistance should act as a hurdle support now, that is 48,150. And then this 20 EMA, which is around 48,100. Sorry, 47,700. So this 47,700 to 48,100 is what we are eyeing as a strong support zone for the banking. Banking still looks comparatively better than Nifty, but yes, one needs to be selective, as we mentioned earlier. Now, this is about both the indices that, due to the weak global close, we are facing pressure. Momentum was anyways missing that, we've shared earlier also. So here, with the market in a wobbly stage, stock selection become more critical. So what all stocks should be on the radar? The first that we have on the list is from the banking space, IDFC First Bank. So as you can see, this it's a steady corrective phase that the stock had been trading in, and finally we are breaking the upper band of this declining channel. Volumes have jumped significantly in this recent rise, and there's a bit of a pause today with profiting in the banking. But considering that the other stocks, they have done pretty well in prolonged corrective phase that the stock has already witnessed. So downside seems capped, and in case if there'll be a recovery, it could be decent recovery, 8 to 10%. Means level close to around 90 to 92, it can easily reclaim. So yes, since we have just crossed this critical hurdle, there could be a bit of a consolidation also, considering the market tone is also slightly sluggish. So one should utilize this corrective tone to accumulate this stock, considering the overall potential after this reversal. So this is first stock on the list. Second, IRCTC. So the last run in the railway stocks, IRCTC didn't participate much, but now when the other stocks are sitting on the sidelines, we are seeing consistency and strength in the trend when it comes to IRCTC. So last 2 weeks, as you can see, strong close. This week also 5.5% kind of a gains, decent volume. We have reached, in fact, we have surpassed the previous swing high. So we have upside open. So with this kind of chart formation, with weeks of consolidation in a very narrow range followed by this move, it usually result in the resumption of the uptrend, and possibly the stock might inch towards the record highs. So this is the second stock that should be on your radar for the next week. And lastly, one stock which can be a dampener for those who are holding, and especially for the pharma index. This is Sun Pharma. So steady uptrend from 1,000 to 1,650, almost 2-3 months of consolidation. Now this sharp cut on Friday followed by this jump, we have reached closer to the critical support of this lower band of the broadening formation. A breakdown of this may result in sharp profit taking. It's just a profit taking yet because the trend has not reversed in stock in days to come. So if you are holding Sun Pharma and if the market corrects further, this could be one candidate that can be on your radar for the short trade as well. So just to sum it up, what we've shared so far when it comes to Nifty, trend line resistance followed by weak global clues, especially from the US market. Both are weighing on the sentiments. 22,350 to 22,150 is the area of support. Upside capped 22,700, 850. Banking comparatively looks better, but with the beginning of the earnings season, obviously, the results are likely to dictate the trend. So stick with the top performer. Within the banking space, we talked about IDFC First Bank, which is seeing reversal after months of corrective phase. Alongside with IRCTC, which has been showing consistent trend with volumes in the last 2 weeks and inching towards its record high. And lastly on the list, Sun Pharma, which could be a candidate to go short in, considering the overall scenario. So this is all from the presentation part. Now, let's do a quick feedback poll, and then you can start your questions. So please fill in your feedback, and once you're done, you can start posting your question using that Q&A tab. Please quickly fill this feedback. And Mr. Martin, if you have any question, please use that Q&A button instead of raise hand. All right, so let's start with Q&A now. Okay, so again, I request please avoid stock specific queries. This webinar is all about how you prepare for the next week. So if we'll start talking about stocks, it might result in a 2-hour session. We plan to, finish this in half an hour so that it add value to your overall, exercise that you do over the weekend and plan your trades. So any sector that you would like to, touch upon, obviously we'll talk about some of the strong name, weak name in that sector as well. But instead of stock specific queries, I would request stick with the sector specific or anything which is related to the webinar. Okay, so accordingly, first question that we have from Mr. Avik Ganguly. Sir, first question, he has a couple of questions. Are oil marketing companies overvalued, and why are both gold, a safe haven, and Sensex going up? Thank you. Okay, so this is an important question, and I'll answer the first part first. That are the oil marketing overvalued? So we are not, talking about the fundamental aspect in this webinar. We are talking about what is going on. So the price says that we still have more legs on the upside when it comes to the oil marketing company. We have recommended a few stocks just for the declaration and disclaimer of late to our clients after this recent correction, both IOC and HPCL. And, there could be a bit of a consolidation, a pause in between, but the tone is likely to remain positive, is what the indications are. So if your view is short term, you may consider, buying opportunities in OMC counters. Now, the second part of your question, why gold and Sensex both are going up. So it's an important question for those who don't understand, the relationship and the correlation that usually work. So precious metal, especially gold and Sensex, uh, it's not that they are completely trade out of sync. Means it's not that when the Sensex is going up, gold should witness decline. But when both, uh, you know, rises with same intensity, then definitely it, raises question on the sustainability of a trend of either of the instrument. Means why gold rises when there is some uncertainty, maybe because of some inflation concern, wars, something like that. Because it's a safe haven demand means people prefer to liquidate their investment and keep it in gold uh, in case if there's something urgency requires, so they can liquidate it easily. But right now, both gold and the equity markets are witnessing a steady rise. There is no as such mechanism that till how long this can last. Means there's a possibility that this trend might continue for a week or a month or couple of months, but eventually one of the instrument would take a sideline or the other would sustain. So this is what usually happens. So as of now, since both are maintaining positive tone, there is no point arguing with the market. If the market says that both are clearly in the uptrend, so one should not look for shorting opportunities if you are a trader. And if you are planning any fresh positions also in either gold or equity markets, be very strict with your stops, especially in the market like this, wherein now we have started seeing mixed signals from the global markets, especially the US, and the earnings season has also started. So hope it answers your query. Okay, next, Mr. Rajiv Kumar on FMCG and pharma. So Mr. Kumar, now it's going to be how the earnings season is going to pan out for both these sectors, because they didn't perform at all. If we exclude a couple of names from both these sectors, means pharma also did well, but FMCG is something which remained lackluster, except a couple of names from the FMCG space which did well. So I feel that instead of sector specific approach for FMCG and pharma, one should look for stocks which which outperform the sector during the corrective phase. So just to name, like Colgate Palmolive in this entire run did extremely well in the FMCG space. Then from the pharma, we have had strong move for Oro Pharma, Glenmark, Dr. Reddy's, OK Davis. So all these names which actually outperform the sector. Till yesterday, it was Sun Pharma also to that list, but today we saw the kind of cuts that we had. So it's going to be more of like stock specific move in days, based on the earning announcement. So, but I'll not be a buyer in FMCG at least for a time being now. So I would rather prefer any correction in banking, metal, auto. Yeah, these three basically should be on your radar if the market resumes, up move after any correction. Okay, next, Mr. Krishna on agri sector. So we are not seeing any clear, signals from the agri-related stock also. So be it chemicals, be it the stocks directly related to the agri commodities like KRBL, LT Foods, and all. So in this also, I would suggest some of these names which are holding strong. So uh, LT Foods are comparatively better than KRBL. Then we have some of the names like Relis from the chemical basket, uh, which showed some buying interest of late. So be very selective in this space also, and if the view is long term, then you can consider accumulating some of these names. Okay, next, Mr. Jagdish Raheja, the election effect. So, Mr. Raheja, we are uh, not concerned about the events. Uh, Here, we are more concerned about the action part of the market. So, we still have a couple of months to go for the election outcome and all. What is important for us as if your view is short term is that if I'm holding XYZ stock and if it corrects by 5%, 7%, whatever your threshold for any particular stock, what will be my action? And in case if it goes up by 10%, 12%, what should be my action? So short term, clearly market trend is mixed, especially with global clues and now the earning season has started, so obviously that will be the key trigger. Election is not on right now on market's mind. So the first and foremost thing is the performance of the US market and the earnings. So these are the two critical factors that currently one should be focusing on. But more importantly, I would still suggest that instead of focusing on the other aspect, which is not under your control, focus on the aspects like risk management, which is clearly under your control. Means when to exit, when to enter. Okay, Mr. Madhav Gupta on chemical sectors. So as we were discussing about agri commodities and agri chemicals, the other chemical stocks are also showing a bit of a recovery. So Deepak Nitrate, uh, then we have PI of late, which has done pretty well, and then now we are seeing the other stocks like Tata Chemicals is also witnessing decent recovery after this volatile swing. So be selective and see the chemical sector, the entire sector was underperforming till last month. So we have started seeing this recovery of late. If there will be any negative surprise in the earnings, that might derail this entire recovery. So be very strict with your stop losses if you have any fresh position and if you're planning any fresh position, especially for the short term. If you are an investor, definitely these levels are good for long-term investments. But short term, there could be a bit of a volatility in case if there be any disappointment on the earning front. Okay. Okay, so next question from Mr. Rajiv Kumar on last 15, 16 day crude also up, base metal also, so energy stocks and metal stocks up in the coming days. Okay, so what I understand from your query is that the up move of crude and base metal should reflect in the energy stock and metal stocks. So that is generally we are seeing, but it's not very direct correlation. Means it's not like the exact correlation. We have other things also like demand and supply, which act as a crucial earlier. Like when we've calculated this ratio, that what happens when the metal prices rises to the metal stock. So the advantage of that is very limited in long run. So at times in short run we do see spike like the way we saw off late in some of these stocks from the metal space like Hind Copper, Hind Zinc. After the strong move in the copper and zinc, prices, but uh, for most part of the month, it was trading very flat. So it's like a couple of days you see this kind of moves in the metal stock, but largely uh, it's not the only factor that the price of the metal dictates the trend, and same hold true for the energy stock also. It means if the crude oil price is rising, it doesn't mean that it's going to help the refiners to inch higher. So be just if you are planning any trade on this, market may disappoint you. Okay, for stock specific queries. Okay, so I'll just take one query, and I hope that some of these queries relate to particular stocks. It will help that how we are eyeing IT pack or IT index uh, now. So there's two sides to this. Good part, the downside seems capped. We are not seeing any major correction in the IT, even if something goes wrong. Means if there'll be any reaction, let's say, this is what charts are indicating that in case if some IT majors also disappoint, also from the current level, we might not see any major reaction. Why I'm saying this? Because we are already under corrective phase when it comes to the IT index, IT pack. So uh, it might trigger some knee-jerk reaction, but it's not going to be a very strong decline in the IT index, and that would reflect in the IT majors also. So barring Wipro, other names like TCS, Infosys, HCL Tech, they're likely to hold, if not inch higher. This is good part. Upside also seems capped as of now, but yes, if you'll compare it from the downside to upside potential, the potential on the upside is much higher. So if somebody is planning, let's say 6 months to 1 year kind of a timeline for the IT stocks, any dip, further dip like 5, 8%, 10% from the current levels in IT majors like TCS, HCL Tech, Infosys is a buying opportunity. So IT, obviously we'll see the reaction on Monday, and that will dictate the trend. But indications are in the favor that the downside seems capped. So this is something which is favorable, and let's see how the market will pan out on Monday. Okay. So next we have Mr. Rajesh on solar sector. So see, we've discussed about the new age themes and themes which are in news on and off, like solar, EV, all these renewable plus railways. So my summation is that it's not going to be 1 week or 10 day or a month long approach. It might take months or maybe more. So if based on any news item, if you plan any trade, it will be largely a disappointment by the end of the day, because we generally see a move when some news comes, and then we see that stock, the move fizzle out. So please, if you are planning, let's say for 4 year, 5 year kind of time horizon, then it makes more sense that you can look, because already some of these stocks from the renewable space, they have done exceptionally well in the last 1.5 years, and now they are witnessing a bit of a profit taking and correction. So avoid aggressive long based on any news item. Okay, so IT we have already discussed, and last thing that before we conclude, I would like to highlight is that the earning season has started now. So please don't experiment with weak stocks. stocks which are already under pressure and they might do something extraordinary during the results, please avoid such mistakes, especially in the small cap space, mid cap space. Means, people look for trading opportunity ahead of the earnings based on some rumors and news. Please avoid this, because the underperformers, they are underperformer for some reason, and they might disappoint you. That at times we feel that it's already has come down from 100 to 50. It's already 50% discount, so it might go further to 40 or 30. So this is something that with the beginning of the earnings season is something that one should maintain in mind. So with this, we conclude this session. Thank you everyone for participating. Next week, same time, same place, we'll connect again. Thank you.